What's up, good people? I am Wanda Lyles, your host of Live Intentionally Today, otherwise known as the Lit Podcast. I am here tonight with a very special guest. But before we get into that, please, we are using StreamYard. So please allow them to have access to your name so we can see who you are in the comments. And welcome, 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 everybody. If you are here today, 5 years from now, 5 minutes from now, catching the replay or whenever it is, welcome. So, somebody's on here already. Hey, I can't see who you is. But but yes, we have a very special guest. It's some more people. Y'all coming on quick tonight. Okay. Y'all trying to learn about this Montees, ain't y'all? Let me see. Where's my comment thing? Okay, there goes. Okay, so yes, like I said, if you are wanting us to see who you are, please, 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 please allow StreamYard to access your name so that we can see who you are. Okay. I don't think they're gonna try to get in your business, or nothing like that. But please. And again, hello, whoever you are out there, whenever you're watching this. This tonight, y'all, is some important stuff for your future, right? For your future self. You might not need it right now or tell yourself that you don't need it right now, but you do. So trust and believe. So without any further ado, I am going to introduce you to a financial planner. Well, she's an independent licensed insurance agent. Okay. So she's going to help you get your money right. This is Financial Planning Month. Oh, hey, Ryan. Y'all, I forgot to tell y'all. So I have a whole daughter-in-law now. Ooh, yep. So my son did get married to Ryan, our little princess. Yep. So we are actually a growing family. Yep. And that was on Saturday. And my cousin, he got married on Sunday. So they had two weddings for our family. So our family is really, really growing. But anyway, so I'm gonna bring my girl. She's actually my cousin, y'all. But Angelica Tucker. Yay! Woo!
Hello.
Hey, Jail. Y'all, I just know so many people, right? It's like most of them family and friends, and they all doing something out here. So, Angelica, so
Yeah.
I don't get you. I know you got a lot of folks at your house, girl. So y'all, if y'all hear them, it's all my cousin and her kids, not Angelica kids. It's my other cousin, her sister-in-law.
My kids here too. My kids here too. Not the youngest one.
Oh yeah, he would probably. But anyway, we're not gonna talk about that baby. But anyway, yeah. So Angelica is a licensed or independent licensed insurance agent. What does that actually mean, Angelica?
It just means that I am independently contracted with a company to sell insurance or to market insurance. But I don't really like the word sell. I prefer to look at it as educating people on really what they need and what life insurance should be used for. A lot of people only think that it's for burial, and it's really income protection. It should be used to protect your income, protect your household.
Oh, well, I was one of them people think. I mean, like insurance comes to my mind, and I think health insurance and life insurance. I don't really think about burial insurance. I guess until somebody died, and then you like, oh, the insurance check gonna come or something. But that's not really. But well, before we get into all that, I'm gonna wait and ask you these right questions. But I also want to tell y'all if y'all have any questions, please post them in the comments, and we will be able to answer them. If we can't answer them publicly, then you can get in touch with Angelica on her own because she be keeping stuff on the low, right? No, I'm just you have to, there's some things when you work for people, you can't say certain stuff. Like when I used to work for the government, you can't say certain stuff. So, anyway, hey mama, hey Brandy talking about her kids, not mine. But so there it includes like burial insurance, life insurance. So And what else did you say? What other kind of?
Well, what I was saying was a lot of people, when they think about life insurance, they only think of, oh, let me have enough to bury my loved one, right? But it really should be looked at as income protection, income replacement. So if you, especially like if you're in a two income household, I'm sorry, but if you're in a two income household and one person, you lose the income of one person, then what do you do? So it needs to be looked at more of, income replacement.
Oh, I like that income replacement because that's for real what you don't think about. And I remember like my parents did something like that, or I don't know what they was doing. But I remember when I became of age, when I became like 18, 19, and I joined the army, these people wasn't approaching me the same way and they were asking me do this insurance, but I didn't know what they were doing. And I wasn't thinking about it that way. But they were like, if you pay this little amount now, then by the time you're 60, and I'm like, man, I'm 18. So I wasn't really thinking about it. But now that I'm closer to 60, I'm like, ooh, man, I should have did that because it would have grown a whole lot more. But I mean, we still did something and I'm not sure exactly what it is. See, that's some bad stuff. So I'm about to learn what we did and how we can flip that tonight to make a difference.
Mm-hmm.
Um, and hi, Tiff. So Tiffany is Ryan's mom, Angelica. They just left to go back to Utah. Um,
Okay.
yeah. So and hi, Michelle. Michelle is like a faithful follower. She be on here every week. So
Hello, everybody. Hey, Diane and Michelle and Tiffany. Hello, hello.
But okay, so let me go ahead and ask you some personal questions. What exactly did like how did you get into insurance anyway, or like what made you decide this is what you wanted to do?
So I'm gonna be honest, like a friend of mine, she just knew that, I was looking for ways to make extra money. And so she put me in contact with one of her friends, and that was honestly my initial interest, just making money, right? But then when I got into it, I was like, oh, wait a minute, people like really need to know this information. And so it switched from, let me make my money to let me help get this information out there. Let me make sure people understand, what it is that they do and do not have, so that they can be better prepared for their future and they can set themselves up better, because there's so much information that we do not know. And like you said, I wish even me at my age, I wish I had known these things, 15, 16 years ago, because I would probably be a millionaire by now. But hindsight is 2020. So that's what we're trying to correct and try to help people with.
Okay, so how early can you start insurance? Because I know, people be putting credit in their baby name. So like can you do that, like do something like this when your child is young?
Yeah, a lot of policies they have where you can add your child on as a rider. You can also get your child a policy as a baby. The good thing about some of, I don't know about all the companies, but I know the one that I'm currently with. Say you get them a policy as a child, right? Well, that means that if something develops during their childhood, like they end up with, I don't know, childhood leukemia or something like that, that does not automatically mean or doesn't disqualify them from having insurance later on in life. Because what happens is they have they don't have to prove their insurability once they become of age.
Oh wow. Because I know, yeah, some things now, like if you try to get certain insurance, it'll tell you like you have a disqualifying health, like you got to get a health screening and all that.
Right. Right.
So I guess people do that, huh? Like you
Mm-hmm.
don't think about it till you're sick or something happens to you, and then it's kind of late at that point, huh?
Right. Yeah.
Yeah. And this is like what you're talking about right now is like the life insurance. So I'm healthy,
Mm-hmm.
and then tomorrow something happens to me and I'm hospitalized, and then unfortunately I pass away. This is that insurance that you're talking about, like that. Um,
Correct. Correct. Well, who's gonna take care of your family? How you gonna get buried?
Mm-hmm.
Who's gonna, how your children gonna survive, all of that. That's what we teach.
Okay. So can you just tell us a little bit more about it, or do you have to get like a certain kind of presentation in order for people to get it? They get
No,
the
no, no, no.
information?
No,
Okay.
no, no. So, like I said, a lot of people when they think about life insurance, a lot of people they only think about the burial portion. So, really, what you need to take into consideration when you have or when you're looking to get insurance is all of your debt, your income, your mortgage, and then your education or entrepreneurship financial needs that your family is gonna need. So either you're gonna leave money for your children or for somebody to for their education or for them to like become an entrepreneur, start their own business or whatever the case may be. So that is really how you determine how much insurance that you need. Um, so does that make sense?
Yeah, because like when I was in the army, they
Mm-hmm.
give you types of life insurance because obviously it's a dangerous job. But
Mm-hmm.
so you pay for different types of insurance, right?
Mm-hmm.
And I always used to pay for the max amount that they offered, but
Mm-hmm.
I didn't, they didn't educate us on like what we were doing. I was just like, "Ooh, they're gonna be rich if I die."
Mm-hmm.
That's all I was thinking about, not necessarily like, "Oh, I'm planning so this person can have an education or to pay off my home." And
Mm-hmm.
even now, I wasn't even really thinking about that. But that's a really good point because if like if something happened to Demond or myself, and recently I just heard this story about a child who lost his whole family, like a 17-year-old child in a car accident. So
Mm-hmm.
coming from a football game.
Mm-hmm. I think I
So
saw that.
the child, so then, but there's a whole house that they maybe have lived in. There's cars that people got to pay for.
Mm-hmm.
And so man, I didn't even think about that. Like, that's just hitting me hard right now because it's like you don't think about that kind of stuff that, like, what's going to happen to the house because somebody got to still pay the mortgage, right?
Right. Exactly. Exactly.
Um,
Yep.
hmm.
And then I know you're in the military, and I know that most jobs they offer insurance. Some of them you may or may not be able to take with you, but one of the things that people don't know, and it's good to have life insurance through your job or whatever, but one thing that people don't know is that first of all, you're not the owner of that policy, right? It's the employer is the owner of that policy. So any changes that are going to be made, they don't have to have your consent because you don't own that policy. A lot of times people don't have like the actual policy documents from their employer. All they have is a certificate saying, hey, you have some coverage or whatever, right? The other thing people don't know, a lot of employers have like an actively at work clause. And what that means is that if you're at work, and you die, obviously they may, they're going to pay out. But say, for instance, you happen to be on medical leave, right? And you die, they do not have to pay out for that. And a lot of people do not know that. And so that is why it is always important. It is very, very important to have your own life insurance policy outside of your job that you own and that you control, all the changes to.
That, like, I mean, I realized, like, I'm still on camera. Let me close my mouth. Because I'm not even, I mean, this is some craziness. Like, so you're out on medical leave and they can just stop just, that's sad. Like, somebody just said that too. That is sad.
Yeah,
They
and
were,
it's not. It's of course every employer is different. Most of them are going to have that clause in there, that phrase in there, but
it's
you
probably
know,
real tiny, ain't it? Like, some,
right? It's something I don't even think they tell you about it when you first. It's a benefit that they offer. And it's real cheap. It is very, very cheap, but just that possibility that they may or may not, they can choose, some of them they may, but some of them they do have that, it's their discretion to say, no, you know what, you died on medical leave and you called in sick this day and then you died and we're not going to pay out.
that's crazy. That is, so is that, also, I don't know if this has anything to do with you too, but like, I know I never did this, but it's something to think about now too, is with like short-term disability insurance, is that like a insurance too? Like short, like, or long-term,
It
like
is. Those are like, protections if something were to happen to you where you're not dead, but you become disabled, you lose a body part, a limb or something like that.
Mhm.
And there, like I said, it's nothing wrong with having those things through your job, but you always want to be the one that's in control of something that has so much effect on your family and
Mhm.
your circumstances.
So that's what I'm saying. So like I know our when I did work for people, because I don't work for people no more, I work for me. But
Mhm.
but
Mhm.
when I remember like sitting in those little orientations, and they would offer, they offer all the insurances, and then they would also offer like the short or long-term disabilities and things like that. So these are just add-ons, you're saying. But when it is not necessarily the job. So like here, because I live in near Columbus, Georgia, and Aflac, the little duck,
Mhm.
um,
Mhm.
they are like headquartered here. So
Mhm.
they have a lot of different insurance. I think it's all different insurance policies and stuff like that. But
Mhm.
so the people from like Aflac, depending on your company, Aflac would come and offer, those types of add-ons. So would that then be me owning it if a company like that comes in?
Um,
Or it could still be possibly with the job.
right, because can you take it with if you own it? The question is, can I take it with me when I leave? Like, do you know what I
Okay.
mean? Like, if
Okay.
you can't take it with you when you leave,
It
then
ain't
more
yours.
than it ain't yours.
Okay.
Yeah.
Dang, this makes sense, because even when I got out of the army, right? Like we were paying, it was cheap, like you said, it's cheap, cheap, cheap.
Yeah.
Like $20 or something
Mm-hmm.
for a $250,000 life insurance policy. But then when you retire or get out of it goes away. So they
Right.
use the army, the government owns it. But
Mm-hmm.
then they offer you like another one, but
Mm-hmm.
it's like triple the price. Like, it's like
Mm-hmm.
almost unaffordable for
Mm-hmm.
people. So I know we did some private ones too. So let me ask, if y'all have some questions. I forget. My mama said, yeah, they don't tell you. You must read the small print. That's right, mama. Always, my parents told me read everything on the paper before you sign it. But so before we get on, can you tell us there's different types. I've heard of like term and whole,
Mm-hmm.
and I know I put that on the advertisement. So what is the difference, or what is each one? What does that mean?
So term life, it is for what it sounds like. It's for a specific period of time. So, it could be for 10, 15, 20, 25, 30 years. Some even go up to 35 years. And then whole life is something that you will have. It's just you will have your whole life, right? Um, but in most cases you're also paying on it your whole life. And so when you're at retirement and you're on a fixed income, uh that payment doesn't change, you know what I mean? So if you can afford it when you're working, you may be paying $150 or whatever when you're working, and it's fine. But what about when you're retired and you're on a fixed income, and money ain't coming in? Of course you're going to have inflation every year, you know what I'm saying? Money's not coming in. So and also with whole life, generally you cannot get as much or really what you need. You remember we talked about your debt, your income, your mortgage, and your education, your kids' education or entrepreneurship. So generally with whole life, you cannot get the amount of insurance that you need for an affordable price. Like I'm in my 30s, and I looked up a $250,000 policy, a whole life policy for myself, and just for me, not my husband, not my kids. It was like $400 and something a month, just for me. And I don't know anybody that can do that.
Yeah, that's a lot. So what's the difference then? Like term, I know other than the time, but so
Uh-huh.
term is typically cheaper.
Term is typically cheaper. You can get a greater amount of coverage for a much lesser um, price. cost, I guess, a much more affordable rate.
Yeah. Right. Okay. So that's when they're kind of like the $20 things like that or something.
Yeah, yeah. So there are different things that are going to affect your price. So, your age is number one. So the older you are when you take out an insurance policy, the more expensive it's going to be. So when you're, of course, and then your health, right? So the older you are, typically you've had some health issues. It may be high blood pressure, diabetes. Those are really common things. It's not saying that you're uninsurable, but it just is going to affect your rate. So the best thing for people to do is to get, a policy when they're young and healthy, so that the rate will be much lower.
Okay. Oh, right. I see what you're saying. So that's when like those people were asking me when I was like 18, 19, just entering the Army, they're asking me. But if it's term, then and you have to do it for a certain amount of years. Are you just paying on it for a certain amount of years, or it's only good for that certain amount of years?
So it depends on it. It does depend on the company, right? But the reason that you want to get it young, and the reason that I also said let's talk about the financial planning aspect of it, is because with the term policy, let's say for instance you had, let's just say $100 a month budget, right? Okay, that you could afford to put out for insurance and savings, right? So let's just say you were able to get a $250,000 policy. You're young, you're 18 years old, and it's, I don't know, $35 a month, right? Well, you still have $65 left, right? So then what do you do with that $65? Well, what we would recommend would be to invest that money. Starting at that age, you invest it over the term of that policy, and then when you're at the end of the term, you're in a financial position where you have enough money built up where you no longer need to rely on the insurance. You have enough assets. Does that make sense?
Oh,
Yeah.
so it's like I think that's what we did then.
Mm-hmm.
Like whenever we was like 20 something.
Mm-hmm.
Like yeah, I know Maya and Anthony were born, but so it's like you can draw. You could draw off of it too, right? If you need.
Mm-mm.
Oh,
Not on the term policy. So yeah, so
okay.
whole life policies you can. I feel a sneeze coming on.
It's okay.
Whole life policies you can pull from them, and that is the reason that they have been marketed it to low income communities, is for that oh, I can borrow from it, right? But okay, but let's talk about borrowing from it. If you're borrowing from it, that means what? You got to pay it back. It's a loan, right? And so
Oh,
when you pay it back, there's interest on the money. So even though it's your money that you've been putting in on this policy, right? If you want to get money from it, first of all, it's not going to be the amount that you've put in. So if you've had a policy for 10 years and you've been paying $50 a month, let me do math real quick. That's $6,000, right? And then say you want to borrow some money. You're not going to have $6,000 available to borrow. You're going to have a fraction of that. And then when you get it again, you're going to have to pay it back. Typically, it's like 6 to 8%, sometimes higher interest. And then it's not just interest, it's compound interest. So it makes it hard for you to keep whatever face amount you originally had. Sometimes I've heard where people have had to say, hey, I just can't afford to pay this back. What are my options? And the option is to decrease the amount of coverage. So then all that money that you have been paying, now you no longer have the right amount of coverage, or what you did have, but it's reduced and you've wasted all this money that you've been putting in,
right.
Yeah.
No, yeah, because that, I mean, I don't want to say people be like preying on us, but yeah, you're right. Like, so if we're I need to check that thing and see what it is. but but that does make sense, because if it's like low income people are just like, oh, and I can get money if I need to.
Mhm.
And then,
Mhm.
and I'm not trying to offend anybody because I'm a low income person,
Right.
uh, my socioeconomic status right now.
Mhm.
But but you're right. Like I can see here again, me joining the army.
Mhm.
I remember I was a E3 and I was
Mhm.
making $900 a month. So that's low income, y'all. That's what I'm talking about. They come in and tell me all this stuff and it sounds real good. And then
Mhm.
I do it, but really I could be paying on this thing for my whole entire life until I say, oh, I can't afford it no more. But then I also thinking I can borrow from it, but it's not really borrowing in a good sense. I'm gonna have to pay it back in order because really, if something happens now that when I pass away or something, so would the people still get the money? Like it would
Less,
just
less the loan, less the loan, right? So whatever
um,
the loan
they
and
would
the
still
interest,
get.
they're gonna reduce that amount. So either way it goes, you're gonna have to pay it back, right? So I mean,
Wow.
that's just like they say, the example is okay. Would you put your money in the bank, and then when you went to go get your money, if they said, "Oh, we're gonna let you have it, but you got to pay this back with interest when you put it back in this account," like who would do that? Nobody. So then why would you do that with your life insurance policy?
Okay, I got you. Because that's what I'm sitting here thinking. Like, so we could still get the $200,000 or 250.
Mm-hmm.
That money, they'll give us that money, but whatever it accrue along the way for the years, if whatever I borrowed, I wouldn't be able, you know, I would have to
They
pay
would
that. They would
reduce. Mhm.
take that. Oh my gosh. So they may not even get the whole $250,000 even, huh?
Correct. Correct.
Oh my goodness. Because if I depend on how much I borrowed, they have to take it.
Mm-hmm.
God, see, this that stuff you don't know, right? So you're just
Correct.
like, oh, I need to do this to pay off a credit card or something, and you pay off your credit card, but then something happened to you, but then mm,
You robbing Peter to pay Paul.
right, basically,
Yeah.
yeah. So I guess it's better to do some other type of investment as
Right.
well that you could, and I know you're not here to talk about other types of investments
No,
necessarily.
but when you invest your money, when you get the money from your investment account, you're just getting the money. You're not borrowing. You're just taking. There's
Oh,
no, oh, you got to pay this back with interest. It's your money. In that case, it is truly your money.
oh, so with the term one, that's where it's truly your money, is
So
what you're.
the term is the type of insurance. The investment is completely separate. With
Okay, I got you.
yes, with whole life, they market it as your savings and your insurance in one, and you never want to do that because that's where they call that cash value. That's what you borrow from, right? But again, first of all, it's never going to be the amount of money that you paid into it, right? It's
Mhm.
always going to be a much lesser amount. And then you're always going to have to, if you do take from that, you're always going to have to pay it back with interest. Whereas if you get your term insurance, it's real cheap. You have what you need, you get your term insurance, and then you begin investing your money. And then if something comes up, then when you need to get money from there, you're just taking it. It's yours.
Right. Okay. Just like if you had another, like a 401k or
Right.
something.
Exactly.
Okay.
Mm-hmm.
Oh, okay. See, that's the difference.
Mm-hmm.
But I think like rich people be doing them whole life things and they be putting in other people's name or something, don't they?
So very, very, very wealthy people, they do take out the whole life. And for them, it makes sense because um, the reason that they do that is because the only way that you can avoid like a inheritance tax or whatever is through a life insurance policy. And so for them, that is why they get that whole life policy and they do that. But for the vast majority of people who don't have those kind of assets, it does not make sense to get a whole life policy, if that makes sense.
Well, I'm wealthy in Jesus' name. And
Amen.
and all my and all my grandkids, but I'm about to put them in their name in my unborn kids, so that way I can borrow money from anything. Um, but no, but in all seriousness, this is like some, I'm like eye-opening information because they don't really tell you, like you're saying, people just sign you up for stuff and you just be like, oh, this price sounds good, I'll do it. Or
Right.
this little information that you're giving me, what did she say? What
She said,
happened?
what happens when you die before the term is up? If you die before the term is up, then your family gets that full amount of your policy. So if you get a $250,000 policy and you die at, you have a 30-year $250,000 policy, you die at year 15, then your family gets the whole $250,000. If you were also investing along the way and you made your family a beneficiary, then they would have access to those funds as well.
Oh wow.
Mm-hmm.
That's good because I know there's also, the army, that's all I know is the army, right?
Mm-hmm.
So there's something that they have that is called the I can't even think what it's the SBP is all I can think of right now.
Mm-hmm.
It's the, survivor benefit plan.
Mm-hmm.
And so you pay into it, but then like for instance, I'm gonna just say there's my husband and I were in the military, right? So we both have it. But for somebody who who just has a like Anthony and Ryan, they just got married. So Anthony's a military member, but she's not.
Mm-hmm.
So if she died before him, and I'm not putting it out there like that, but if she died before him, then he just wasted all his money because it doesn't go to anybody else. Like you have your children listed, but then once they become 18 or whatever, something like that, when they're no longer your dependent children, then they drop off. So like as long as your kids are in college, they can still be on there. But when they drop off, now you've paid, and then your spouse dies before you, that money is just wasted because it doesn't go to anybody. But they don't tell us that. And like my mom gets it, but that's because my dad died before her. But if my mom would have died before my dad, he would have just wasted that money for all them years because it doesn't go anywhere else.
Right. That's
Um,
crazy.
we have another question. It says, "Can you take out a policy on anyone, like a sibling?"
So, in order to take out a life insurance policy on anyone, you have to have an insurable interest. Meaning, if you if you're going to be the one responsible for their final expenses, then yeah, you can. If even if they are a sibling, you have an insurable interest. You're trying to protect um, your finances. That makes sense
How do
because
you?
you're going
I'm
to.
sorry. Do you have to prove that or something? Like prove it that you have an insurable interest?
So that would be determined. I don't want to say this incorrectly, but I would think that is I don't want to say the discretion because everybody is held you're to abide by whatever the laws of your state are. But I think that the insurance agent, the one who is um, in the doing the policy, they should know that. Typically, if you're not, because you have to answer medical questions, you have to have the person's social security information, all that. You have to have all that information. And so if you don't and you're not able to get it, then chances are you're not privy to that information and they don't want you knowing that information, and you shouldn't be taking the policy out on them anyway. So I would
So
say
I'm sorry.
the whoever is offering the life insurance ethically should be able to determine that.
Because you have to get their social security.
You have to get that information. A lot of times they ask for driver's license information, all of that stuff. But yeah, if that person, like, of course, if your sibling lives with you and you depend on their income to pay for the mortgage or bills or whatever, then yeah, you have an insurable interest. But if it's somebody, a random neighbor down the street, you can't get no life insurance policy on your neighbor because you have no, there's no insurable interest. You have no dealings with them. That's just no.
Okay, she said like a caregiver. So
Yeah, if they're a caregiver, then yeah.
So like my brother is
Mhm.
just we're the only siblings of each other. So I could, even though like we don't live together or anything like that, could I get a policy on him even though he got his own family, I got my own family?
So I would say, honestly, I would say you really don't have an insurable interest because, like you said, he has his own family and he's in a different, like you're not dependent on his income. Hopefully his family has, a policy out on him. I would encourage, he's able-bodied, right? I would encourage them to get their own policy. Now, there are some situations where like they can get like say for instance, he wanted a life insurance policy, but he just couldn't afford it, right? Well, somebody else could be the payer and he could be the owner of it. Does that make sense?
Yeah.
Yeah. Somebody else can pay for it. I mean, in that case, whoever owns the policy does not necessarily have to be the one paying on the policy.
I get you. But because at first I was like, why would I pay for somebody? But then I get it, because at the end of the day, if it's just me and my brother and something happens to him, somebody in his family is not able to pay.
Exactly. He could leave you as a beneficiary.
Right. Because that's some good stuff. So what can you answer this question about like so obviously like burials are not cheap, having funerals and things like that. And I know a lot of people are doing cremation now, like, well, they were doing COVID, but what is like is it, because I know we had like $10,000 riders or something for our kids. Is that normal? Because I'm thinking, I don't even know if $10,000 is gonna pay to put somebody, like.
Yeah, for the kids, typically you can't get anything more than 50,000. Just because like you're not dependent on your kid's income. So we're not trying to make you rich off your kid. You know what I mean?
Okay. So I shouldn't really even be able to put it in my grandchildren's name then. Like I shouldn't.
No, you should. I would say you can get your kids an insurance policy. That is if something were to happen to them, that you would be able to take care of, final expenses. For them, yes, that's all they need. You're not dependent on their income for your household. They taken away from my pockets. Really is what they do. But what mine do anyway. But for them, that's why typically like I think the max and really all of them is like $50,000 that you can get on a child. But again, it's good for a child to have an insurance policy, because when they become of age, they don't have to prove their insurability with some companies. So if you already have a policy, it don't matter if they didn't develop cancer, high blood pressure, seizures, whatever, they don't have to prove their insurability when they become of age. Now, they may be capped on the amount of insurance that they can get. It may be like 5 times the amount of coverage that you had on them, or a maximum of, let's say, 150,000. But at least they have something, you know what I mean? And they don't have to, even if they have a medical condition, and then so it's not harder for them to get something elsewhere.
Okay. Well, hi, Miss LaGreta. I'm not welcome. But so I guess I'm just thinking about this because you don't really think about what it's for other than burying people. And, I know people be like, I'm gonna get that insurance money, and you hear families fighting about insurance money. But really, I'm sitting here thinking like, I mean, Lord forbid, I do not want nothing to happen to my mom, but she got a whole house with some land. But it's
almost paid. She almost at the finish line.
Right, she's at the finish line. Right. But for somebody whose parents, like, okay, if something happened to me and to mine, my Aunt Anthony got to deal with this whole rest of the money that we owe on 2 houses, because we got 2 houses.
Exactly.
So that might be the whole insurance money right there.
So technically you need to make sure that you have enough. A lot of people, they rely on these like crowdfunding and stuff like that. But honestly, like, if you love your family and you don't want them to struggle, it's already hard enough while you're here. Why would you want them to struggle when you're not here? So, it may be a press, I'm not just saying everybody is rich and they have $100 a month to spend on life insurance or whatever, but let me get what I can while I can. And then if later on down the road, I can increase it, because it's really our responsibility to make sure that our family doesn't have to have that added stress, when we're not here. So, honestly, like for you, make sure first of all that you have enough life insurance to cover those properties being paid off when you're gone, and then and Diane said one more payment, and then if that's not, if you can't get any more life insurance or whatever, then begin your investments so that way there's something um,
Something.
built, or even if the life insurance takes the whole amount that it would take to pay off the properties, you have your investments to fall back on for something left for the family, to take care of burial, whatever other final expenses that there are.
So is that pretty much why people end up having to have like estate sales and sell their families?
Well, yeah, and that's more so because there wasn't a will.
Oh, okay.
Yeah,
Not necessarily because they can't
not,
afford to.
right. Yeah, that's another thing that we help people with is getting a will. So
Yeah, people. I'm glad you said that because people have wills, and I've seen this because even in counseling, I have to deal with different stuff like this too.
mhm.
Where if I forgot why I had to do that, but anyway, it was something that I had to do, and I had to take this class about it. And each state has its own laws or whatever, but it's like if you don't have a will, even if you feel like you don't have anything, you
Mhm.
should get a will, and you need to keep it updated because if Angelica and I were married and then we got divorced, but she's still my beneficiary on all my stuff, and I never had a will or anything else to change, and I forgot to change it because I've even seen that where people have forgot to change their beneficiary.
Mhm.
And like my friend that I used to work with, he just told me this, like his friend,
Mhm.
some guy she was married to way long time ago that she wasn't even thinking about because they had like just it was a quick marriage, and she
Mhm.
wasn't thinking about it anymore. These people called her saying, she had a whole husband and he had a whole wife and family and kids, like they each had separate whole new families. So she gets a call and they're like, do you know Joe Smith? And
Mhm.
she's like, yeah, why? Like, I mean, yeah, why? Why are you calling me? And they're like, you're listed as his beneficiary. Is he your spouse? All this stuff. And then the current wife was like mad and wanting to fight because she needed this money, but the lady was like, I ain't giving it to you.
Yeah, it happens. It happens more often than we know about.
Even if she, and I'm like, it sounds kind of messed up, but because she was like needing to take care of her kids and all
Yeah.
that.
Well, you remember I talked about the insurable interest. Like you only have to have the insurable interest at the time of the policy. It don't have to stay that insurable interest throughout the policy. So even though they're no longer married, then if he didn't change his beneficiary, then unfortunately,
Right. You got to go. Yeah, Michelle said, yes, get that will. Verbal doesn't count. It does not. And and that was the thing I was going to say, each state, I think it depends on, it goes like a hierarchy. Like if there's no will, there's no information or whatever, it goes to like a spouse and then like the oldest child, and it goes down the line. Or if you don't have anything, then it also has to go through probate, which prolongs it. So yeah, get a will at least, even if you just put somebody's name on there just to say, I'm leaving everything, or I'm leaving my Angelica as my executor, then at least there's something. And then she can make decisions so it doesn't have to go to probate, because when it goes to probate, and that can be a whole mess.
And
And
it's a whole bunch of other fees involved with that.
that's what I was gonna say. There's fees and all kinds of stuff that people don't even think about. So I'm glad. So your company at least does that helps people with wills and stuff like that too.
Mm-hmm. Yeah.
What about those what do they call it? Like living wills, or the little thing they always ask you when you go to the hospital? I can't think. Do you have something?
Yes, so we have a service. It's called prepaid legal. So it's a small little monthly amount, but it basically everything. Like you can have a lawyer on retainer. They help you with your living wills, your power of attorney, that stuff like that. So yeah, it does all of that.
Oh, okay. So that's interesting.
Mhm.
Well, I know you got all them children over there getting their hairs did. All my little baby cousins. I love them. Um, but yeah, both of your kids was in Maya's wedding. So,
Mhm.
but anyway, I know we ain't here to talk about weddings. Let me ask, is there anything? Oh wait, we have Miss Evans on. She says, "What's the process of updating a will from a different state?"
Oh, I don't know. I'm sure there is an attorney involved with that. That is definitely more on the legal side. So we just provide the service, to get, but we're the agents and the financial advisors. They're not the ones actually doing it. It's the attorneys.
Okay, but I'm thinking, Miss Pat, if you can go, well, I don't know. See, everything I know is Fort Bennett, like it's through the military. But I'm thinking that, like she said, you could probably get go to wherever you can get a will from, like an attorney, or at the courthouse somewhere, and just ask them if you can switch it over or something like that. And there might just be a small little document and some fees. Everything got fees that you would have to do. Um, Oh, my mom said that it's a headache because even with the will, they still give you a hard time. Mm. Oh, I see what you're saying. Yeah, because yeah, it was a lot when my dad died. But yeah, Miss Pat, I think if you should probably you may be able to go to your local courthouse and ask them, because there might just be something as small as just getting notarized. I don't know, but that's a great question. I'm sorry we can't give you a better answer. Um, are there any more questions before we let Miss Angelica off the line? Any more questions? Well, while they're typing that, Angelica, is there anything you want to add, um, or how they can contact you if they need some more information? Because I didn't say this, but Angelica is in Texas, y'all. Um, so each, so she's not licensed. Like for people,
Right, you have to be licensed in whatever state that you're wanting to offer services in. So
okay,
right now, I'm only licensed in Texas, um, but you know, maybe somebody in Alabama or Georgia would go ahead and get licensed so they can help all the Alabama, Georgia folks out.
what about, well, is that something that y'all do too? Like if I wanted to, if I
So yeah, so the good thing with, first of all, let me tell you, there are a lot of people that need insurance and that like don't know all of the information. The little bit of information that we talked about, there's so much more we can get so much more into depth on this subject, but for time's sake, you know, but um it's like I said, there's so many people that need the information, so many people that don't have access to it. And so yes, there's if people are wanting to help get this information out to their communities, we do, help get people licensed in whatever state that they're in to be able to offer life insurance products. Also with Alabama and Georgia, they're one of the very few states that offer temporary licenses. And so like for me, I had to in Texas, I had to study, take a test, pass the test, apply for my insurance license with the state. I had to get fingerprinted, all kinds of stuff, and then I was able to start selling life insurance, which I hate that word again. But in Alabama and Georgia, they issue temporary licenses, so you can start making money right away.
oh wow,
Yeah.
that's I guess
Even
that's a
before you
good
pass the test. It's good, but of course,
it's
you would
kind of
need to.
scary.
Yeah,
It's kind of
yeah.
scary.
You would need to definitely have somebody guiding you. You be with the company like like the one that I'm with, that could provide the training and everything. Because you do have up to 6 months to get your license, but again, you can start making money right away. So
So you do it part-time?
yes, for now, I think if the Lord wills, if the Lord is willing, I will eventually do it full time.
Okay. So you must make some decent money then. 'Cause
Yes, a little bit, here and there. But to me, like that's not. the most
Right.
important thing, like I said, it's good, but I'm more on the, hey, let's help people get financially set, because it's so much stuff that we don't know. One of my friends, she talked to a pastor here in Waco, and he was a retired principal and his wife was a retired teacher. And because he was able to do some investments with our company 30 years ago, he said he is now living just off of the investments that he made 30 years ago. He hasn't even had to touch his retirement. So, that's something important that I wish, more people would do. And hopefully that, it will all start doing from, moving forward after hearing this. Because wouldn't that be nice to just be living off the investments? You don't even have to, you still got all your retirement put up.
Right.
Somebody else,
Yeah, that is awesome. And I want to add this comment that Charina made, because it's also something that I know I want to say our family has a trust. It says put property and things in a trust, especially for homes, because you'll have to pay taxes on the property, which is, and I think that's what like our larger family has, is a trust for our land, because we have a lot of land in Texas. So that is something thank you for adding that, Charina, because that is because that's something else. Like let's just say again, like, I got kids. So my married into children. So Ryan and Darius, like, if because they married into our family, and say we had all this property, if I don't have it in a trust. So this is what I was talking about. If say Anthony and Ryan are doing something, they're married, and then they decide they don't want to be married anymore, then Ryan could have access or be able to obtain land and all this stuff that has been in our family for generations, because we didn't have it in a trust and we don't have it set up a certain kind of way. So and I'm not saying that it could be a bad thing, but it could be, especially with people not taking care of their personal business the right kind of way. And it could be a big old fight, because this spouse that's married into your family can take away the stuff, because then it's legally theirs now, so you can lose some stuff that has been in your family for generations. But I just, I'm glad that you brought that up. Yeah, you got to protect yourself and protect your family. And I'm so thankful that Angelica came on just to share some of these little tidbits. So if what's the best way for people to get in contact with you if they would want some more information, or just if they have a question? Even though I know you're in Texas, you may be able to still help.
So I'm on Facebook. It's Angelica Holmes-Tucker. And then I'm on Instagram as well at Angelica Tucker. And then if you just send me a message, I will respond to you. And then I'll give people, I don't want to be giving my, Wanda didn't want me to get my phone number out all over this live. People may be calling me 10 years from now.
Because you is cute. Some crazy man might be trying to call you, girl.
You're right. But they might be hitting my DMs too.
Uh-huh. That's true. But you can at least block them on there.
That's true. So, but I'll give my phone number out to individuals if they need to get in contact with me. So first start with social media platform, and then we'll go from there.
Is it at Angelica Tucker on Instagram? Okay. I just want to make sure before I put it. So I posted both Facebook and Instagram, and yeah, y'all, please consider this. Please consider covering yourself, your family, because people, especially now with, we saw it with COVID, people are dying unexpectedly. Things happen, and you don't have any way to care for the after expenses. It's already hard enough that you're going through it as the grief of loss of a loved one, but then they're gone, and then what? They still have things that have to be taken care of. And hence why you were talking about people end up having to do crowdfunding, trying to raise money, selling plates, all kind of stuff like that. So don't be caught like that, take care of your stuff. And reach out to Angelica if y'all have any more questions, comments, concerns. She'll help you. at least maybe can y'all find people in their area if because
Mhm.
not everybody is on,
Oh yeah,
in Georgia or Alabama,
right.
there's other people.
Yeah, whatever area they're in, we can find
Okay.
people there. Mhm.
Okay. So yeah. Well, thank you. And before we go, Angelica, do you have something that you do intentionally each day that you could share with everybody? Because this is Live Intentionally Today.
So, my life is so crazy. I don't think I ever go to bed or wake up at the same exact time every day. But you know, I do I'm constantly like, maybe not even just I'm constantly like praying in my mind, every day as far as my business goes. I'm, trying to make sure that I post something on social media. Um, I just try to stay positive, think positively every day, even when I don't feel like it.
No, that's good.
Yeah, no,
I
for real.
Because you have to trust, right? You have
Mm-hmm.
to trust. Lean on them, and we need
Yeah,
that. So I
yeah,
like even because I used to just pray in my mind only because I didn't
yeah.
feel comfortable praying out loud. But yeah, so even
Well,
if
yeah, because when I'm at work or something, I just, I have to. I have
mhm,
to. But I definitely make sure I try to keep my mind right all day long.
yeah. And thank you so much for that, and thank you for what you do. Do bring in this information to common folks, for
Hmm.
us because we can get taken advantage of and if we don't
Hmm.
know and knowledge is power. So that's why we have the tea every Tuesday, girl. Every Tuesday. We come in with that transparency, awareness, well, education and authenticity. So yeah,
Hmm.
that's why I like to do this for this exact reason. There's stuff out there that we don't know about, or we may not understand, or we may be
Hmm.
confused about. And so, if you can spill a little bit of tea on it, then we don't mop it up. Um, but do you have any final words?
I don't. I think you've already said it. Like, just make sure that you take care of your family while you're here. Like, prepare for the future. Even though we do hope that it's many years from now, we have to be wise in our decision making and prepare for the future. A lot of times, I said this to somebody the other day. We lack in the future because we don't prepare for it. We never prepare for it. And so
Yeah,
in order to rectify that, we have to be more intentional about these things.
intentional. I love it. Yes. And so I'm going to intentionally let y'all go. But before I go, thank you again if you're watching this now with us live or in the future, intentionally. As I always say before we go, I am here, is now, and I am alive. So make these choices, these decisions to have a better future. Okay, y'all? Have a great night. And thank you all for joining us. Remember to live intentionally today.